ago, urging the House to pass the state aid bill. The House expected to vote on that bill this afternoon, and we'll hear more on this story from our Juliana Goldman in just a few minutes. And this is Bloomberg News. I'm Julie Hyman.
I'm Mark Crumpton. Thank you so much for joining us on this Tuesday. Today's Fed meeting is garnering more attention than a lot of previous meetings. Many traders looking for signs the rate-setting committee might be looking to kick off yet another round of activities meant to fire up the economy. Let's get to our markets desk with Adam Johnson and Dominic Chu. And guys, what are traders expecting to see this afternoon from the central bank? Dom, let's start with you.
Well, basically, I mean, the idea here is the Fed fund futures out there right now are pretty much pricing in about a 60% chance of no change whatsoever and about a 40% chance of an actual maybe decrease to zero.
Decrease,
if you will, a decrease to 0%. So right now, traders are kind of a little bit split right now about whether or not we're going to see, perhaps a more easing or accommodative, monetary policy, if you will, Adam.
And that's part of the thing. John Spinella over at Jefferies, he said the prudent thing for the Fed to do is nothing. He said, and yet the markets will probably be disappointed by that simply because the market has come to expect some sort of action. That's part of the issue. And, we have talked to so many different economists. Ethan Harris at Bank of America Merrill Lynch, Don Rissmiller over at Strategas. He says, again, they all say the prudent thing is do nothing, but it boils down to the fact that, once you start getting the market accustomed to action, the market wants the action. It's like a drug.
Well, AJ, let me ask you, because Dominic just pointed out, he said 60% pricing in that the Fed's not going to do anything. What's that say for the inflation outlook?
Well, the inflation outlook is minuscule. If you look at what's happened to CPI, Consumer Price Index, and that's arguably the measure of inflation everyone looks at, that is actually starting to turn down. It had been kind of reinflating. And remember, you want a little bit of inflation in the economy. It says there's growth out there. But once you start to see it turn down, as we have over the past couple of months, that is a concern because it says there's no growth.
Well, also, I mean, one of the things that a lot of other traders look at is this idea of TIPS, or these Treasury inflation-protected securities. And if you look at that, there's a difference, a spread, if you will, between that and the 10-year bond. And right now, that's below 2% here. So traders are not out there seeing a lot of inflation, at least in the short run or even medium term right now.
So guys, does that mean that the markets are anticipating a rate hike rise this year, perhaps?
Not this year. There's about a 1 in 4 chance, according, I think it's 28% if you look at the Fed fund futures, only a 28% chance that there's any kind of rate rise this year, Mark, which means we're staying here for a long time, and that is exactly what Bernanke has effectively been telegraphing to the market over the past couple of the weeks.
But remember also, guys, I mean, for all those viewers out there as well, the idea is a lot of people are looking for this Fed statement, if you will, to kind of indicate something different. Remember, there's a lot of talk out there about quantitative easing Part 2, QE2, you'll hear it referred to in slang terms on the floors all over the place. Yeah. Whether or not the Fed is going to go out there and change some kind of a policy to make more money available, if you will, whatever that's going to be, whether that's in setting inflation targets or whether that's, maybe not paying interest on excess reserves or possibly even doing something more with reserves. So,
in other words, Mark, the Fed has to let the market know that it's got its eye on the ball, that it's involved, even though, again, as you talk to all these economists, they say probably the smart thing to do is nothing, just let more data come out.
So what's the market telling the Fed right now? I'm looking at the major indices, Dow down 90 points, S&P down 11, NASDAQ down 33.5. Dom, what's that telling us?
Well, here's the thing, though. The markets have been on a nice run here for the last few weeks, in fact. I mean, albeit like Carol Massar and Matt Miller, they always talk about on light volume here. Not a lot of conviction out there.
By the way, lightest day of the year.
It's been massive, this idea that people just don't want to come out there and trade and whatnot. So here's the thing. If you go out there and look at what's going to happen here today, it could be profit-taking, but it could also be signs that some of this macroeconomic data is actually starting to set in now. And we also saw some weakness out of China. We get those numbers out later on tonight. This could just be a global slowdown story across the board, and that's why maybe perhaps some traders are saying, let's get some risk off the table here.
Exactly.
Right. Dominic Chu, Adam Johnson joining us from the newsroom. Guys, thanks so much. Julie?
Well, while investors wait on the Fed, we've got the latest snapshot on the economy. Fresh data showing confidence among small business owners has fallen to a 3-month low. It also demonstrates why companies are holding the line on employment and pay. Sue Keenan is here to break it all down for us. Sue?
Well, we've got a half dozen economic reports out today, ranging from wholesale inventories, wholesalers still holding on to inventory because demand is slow, and economic optimism. And grabbing attention right off the bat, data showing the world's largest economy lost momentum heading into the second quarter because worker productivity unexpectedly fell. Now, it's the first drop since the end of 2008, and in the view of some economists, raises obstacles to a convincing labor market recovery. Economists had predicted that productivity would increase. There was an increase in unit labor costs. That's the first gain in a year and follows a larger than expected drop in the first quarter. Now, part of what the Fed will decide today is whether additional steps are needed to spur economic growth, of course, after it weakened last quarter. Julie?
So we had these official economic releases you're talking about, but beyond that, Sue, there are also a few surveys out that give us a look at how business owners see the economy, how they're feeling right now.
Those are interesting because the feel is not good. In the words of one observer, you could really sum up the NFIB report on small business optimism by saying, turn out the lights, the recovery is over. Check it out. The National Federation of Independent Business Conditions shows conditions slipped, I should say, almost a full point, 88.1 in July. Now, the NFIB says this persistent reading under 90 is unprecedented in its survey history. They call the private sector, quote, missing in action. It's a reference to the traditional power that small businesses have as the drivers of the U.S. economy. Now, economists tell us as long as this part of the economy is in a deep funk, not optimistic, the recovery can continue. And get this, most CEOs say they're holding steady on hiring in the coming year, no new jobs, and that is significant when you consider that small businesses generate roughly 64% of our new jobs over the past 15 years.
So, Sue, when you look at all the data today, when you look at the surveys, what's going to have the biggest impact? I mean, you always have to look at these and sort of prioritize.
Well, I mentioned wholesale inventory data. That is likely going to result in private forecasters knocking down their estimates of second quarter GDP. Now, the Commerce Department penciled in at about a 0.5% increase in inventories for June. If we get a similar number on Friday when the business inventories are published, Q2 GDP could come in as low as 1.7%. That's likely what economists are talking about today as the takeaway.
All right. And, of course, they're going to be talking about the Fed once it comes out with its statement. Thanks a lot, Sue.
All right. So with data continuing to show a weakening recovery, concerns have been growing about where we are headed. The new buzzwords now are depression and deflation, and the folks that tout them are increasingly gaining notoriety. Brennan Lothry joins us now with more on that story. Brennan?
Yeah, Mark, look, when prognosticators in the past have said they expected to see 60% declines in the stock market, that inflation would be north of 20%, they kind of would have been banished to a private wing over at Bellevue. But those same folks right now who are making those same kinds of predictions, well, people are actually paying attention to them now. And it's not just the inmates and patients at the mental hospital, Mark.
Well, we've had more guests on lately who are much more concerned with deflation and potentially a depression, much worse than what PIMCO's Mohamed El-Erian's predicted, right?
Yeah, and just think, not too long ago, many people were poo-pooing his new normal thesis. He's now kind of the mainstream. Others out there, much more pessimistic, and they're getting on TV, they're being quoted in the papers, and people are listening. Nouriel Roubini thinks the global slowdown is going to get much worse. David Rosenberg, he's so sanguine about the economy, he thinks the yield on the 10-year note will dip below 2%. Jeremy Grantham thinks that deflation is the big risk. Now, I talked to a financial advisor in Atlanta this morning, and he said a good chunk of his clients have been reading much about their research, something that he has never even seen before. And then, of course, we have Albert Edwards of SocGen and Raoul Paul. He's a former Goldman Sachs derivatives trader. Edwards is the one who's actually predicting 60% declines in the stock market, followed by 20 to 30% inflation. He's drawing crowds when he speaks. And then Paul, who recently predicted a 1930-style depression in the U.S. and bankruptcy for Britain, well, he's drawing the uber-rich to his newsletter, and he even has a waiting list for it. So the fringe is really becoming much more closer to the mainstream. Now, we'll see what the Fed says at 2:15 to see if they are moving much closer to those views, and if so, you're likely to hear more of those bears in the future.
All right, Brennan Lothry joining us from the newsroom. Brennan, thanks.
Let's now take a look at some of the other top news that we're following. Former Senator Ted Stevens and former NASA Chief Sean O'Keefe were believed to be among 9 passengers on board a small airplane that crashed in Alaska. Officials have said 5 were killed in the accident, but it is still not known whether Stevens or O'Keefe survived the crash. That crash occurred about 20 miles north of Dillingham last night. O'Keefe is currently the head of defense aerospace giant EADS, or EADS, North America, and Stevens was one of 2 survivors in a 1970 1978 plane crash in Anchorage that killed his wife and several others.
Xanadu, as in the $2 billion shopping mall that was being developed by a group led by Colony Capital, has been taken over by lenders, including Credit Suisse, Capmark Financial, and an affiliate of Fortress Investments. Construction on the New Jersey Super Mall, which was to include an indoor ski slope and Ferris wheel, has been in limbo for 5 years. The Colony Group took over the project in 2006, but was stymied when lender Lehman Brothers went bankrupt in 2008.
Well, coming up next, we'll have an update for you on BP and its progress on the well in the Gulf.
Corporate America taking the problem of rising health care costs into its own hands.
We have found that the sticks actually work pretty darn well.
What companies are doing to shape up their workforce and your wallet. Working it out. Our series begins today at 4:30 p.m. on Street Smart.
It was just gigantic.
It was humongous, enormous, huge bill.
That's actually when we switched to Vonage.
The service is great. I don't see any difference with the call quality. More, I can just pick up the phone, call
as many family members as